Welcome to the GFU Forex trading course. The flag chart pattern is a continuation pattern that occurs as a brief pause in the trend following a strong price move higher or lower. This pattern can exist as the bullish or bearish flag. The bull flag chart pattern looks like a downward sloping rectangular channel denoted by two parallel trend lines against the preceding trend, while the bearish flag chart pattern looks like an upward sloping rectangular channel denoted by two parallel trend lines against the preceding trend. We have discussed the pennant chart pattern as a pattern that signals a continuation of the previous trend. The flags and pennant chart patterns have the same technical implication because they both signal a continuation of the previous trend. The flag chart pattern consists of three components. Number 1, the flagpole. Number 2, the flag itself. Number 3, the continuation, the breakout. As we can see on this price chart, the flagpole is the initial move in price. It can be represented either by an uptrend or a downtrend price move. Here's an example of the bullish flag. To determine the flagpole, we would measure from the swing low here to the high of the swing here. And on the bearish flag, to determine the flagpole, we would measure from the swing high here to the low of the swing here. The flag of the pattern is the key to this pattern. This is the point at which the market consolidates for a period of time after a strong move in price. The period of consolidation is irrelevant. However, do note that longer consolidation periods tend to lead to more aggressive breakouts. The continuation is the point at which the market has finished consolidating and is now trending in the original direction. Using the distance we calculated for the flagpole, we now have a measured objective for a possible target. How can we trade the flag pattern? Let's take, for instance, the market is in a range, and then finally it breaks up or down. When it breaks up or down, the best time you want to trade the flag pattern is on the breakout. Alternatively, if the price breakout moved too fast, then you could wait for a pullback. Take note, this is a very powerful breakout price action chart pattern, and most time a retest may not occur. We can see how the bullish flag pattern led to a more bullish rally in this market. The best zone to place a stop loss would be at the last higher-low swing that leads to the bullish breakout of this pattern. Where should we place our take profit on the bullish flag pattern bullish breakout? Setting take profit depends on three techniques, which are: Number 1, measurement objective. Number 2, riding the trend through the trailing of profit with indicators such as moving averages, EMAs, and others. Number 3, traders can also target the next powerful key level resistance in the market. The technical concept of the taking profit target is based on the measurement objective of the bullish flag. The two edges of the pole are measured. To do this, we need to measure from the starting point of the pole, from the low here, up to the high swing of the pole here. Next, we then replicate the value measurement from the point of the bullish breakout of the flag pattern here, all the way up to forecast the bullish measurement objective value. Let's search for a bearish flag in a bearish trend. Here on this chart, we can see the bearish rally from the high swing to the low swing here resulted in the pole. The consolidation of prices transformed into a rising channel in a bearish trend. This rising channel together with the pole is technically tagged as a bearish flag. The lower band of the flag was broken downward, and later the bears took control of the trend. Price later made a retest, thereby giving confirmation of the broken support of the bearish flag is now a potential dynamic resistance for price. We can now see how the retest gave another opportunity for traders who missed the first breakout downward. Where should we place our stop loss on the flag pattern formation? The safest zone to implement our stop loss on the flag pattern should be at the last swing which led to the pattern breakout. Placing a stop loss above the retest of the bar is acceptable, but most times, price may later make a sharp pullback and thereby hit our stop loss. The low-high swing here is the best zone to implement our stop loss on the bearish flag. Where should we place our take profit on the flag pattern formation? Setting take profit depends on the same three techniques applied on the bullish flag pattern bullish breakout. The technical concept of the taking profit target is based on the measurement objective of the bearish flag. The two edges of the pole are measured. To do this, we need to measure from the starting point of the pole from the high here down to the low swing of the pole here. Next, we then replicate the value measurement from the point of the bearish price breakout of the flag pattern here all the way down to forecast the bearish measurement objective value. Alternatively, traders can ride the trend through the trailing of profit with indicators such as moving averages, EMAs, and others. Traders can also target the next powerful key level support in the market.